Welcome back, guys, to module 5. In this module, I'll be talking to you guys about liquidity. What are liquidities? Liquidity are areas in the market where there are a lot of buy orders or a lot of sell orders. There are three types of liquidity. We have the equal high liquidity, we have the equal low liquidity, and we have the trend line liquidity. So I'll be showing you guys how the market creates liquidity on an equal high liquidity, and how the market creates equal low liquidity, and how the market also creates trend line liquidity. So let me show you guys on a drawing before I show you guys how it looks like on a chart, right? So first of all, if the market wants to create equal low liquidity, that is when the market is moving to the upside. So you tend to see that the market pushes up, comes back here, retrace a bit, retrace a bit, retrace a bit, and then pushes up, comes back here, retrace, 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 pushes up, comes back here, does this same action, pushes up, comes back here, does this same action, pushes up, right? So all these points here are what we see as equal low liquidity. So I'll be signifying my liquidity with the dollar sign, right? See, that's an equal low liquidity. Even this point here is also relatively equal, right? Even this point here, relatively equal, right? Liquidity, right? And even this point here, relatively equal liquidity, right? And what you tend to see is that sometimes what you tend to see is that, remember I said to you guys that the market is designed. If I've not stated it to you guys, I'm stating this right now. The market is designed to move towards liquidity, right? So after the market has engineered all this liquidity, you tend to see that the market would break minimum structure, come back, break minimum structure, come back, and then come back to sweep out all this liquidity, right? And this is what the market does every single time. It creates liquidity and it goes ahead to sweep the liquidity. So this is how the equal low liquidity looks like. For the equal high liquidity, if I invert this is how the equal high liquidity looks like, right? So the market is coming down, it creates equal highs, and then pushes down, breaks structure, creates equal highs, pushes down, breaks structure, creates equal highs, liquidity, pushes down, breaks structure, creates equal high liquidity, pushes down, breaks structure, and then all of a sudden you tend to see how the market would sweep out all the liquidities. So this is what liquidity looks like. And now, how does the trend line liquidity looks like? So now the market is moving upward. We can see that this market is trending to the upside. So what does how do you tend to know the equal low? How do you tend to denote trend line liquidity? So you can denote it from here. You can see that the market is trending up, right? So you can see that the market is trending up, and whenever the market taps on this trend line, the market engineers liquidity. So you can see that the market moves taps on this trend line, it engineers a lot of liquidity on this trend line. It moves up, taps on this trend line again, engineers a lot of liquidity on the trend line. It moves up, taps on this trend line, engineers a lot of liquidity, moves up, taps on this trend line again, engineers a lot of liquidity, moves up, taps on the trend line again here, engineers a lot of liquidity, but fail to move up. And then what happened? The market seek to take all the liquidity, and the market took all the liquidity. So we trade into liquidity zone. We don't trade from the liquidity zone. We trade into liquidity. Why? Because the market is literally designed to move towards liquidity. So this is what the trend line liquidity looks like, right? So I'll be showing you guys on the real chart. All right, guys. So let me show you what how a trend line liquidity looks like, right? So you can see that from this zone right here, the market was trending up, right? So we can literally draw our line from that zone right there. We can see that for sure this market has been trending up, and this trend is what we see as what? Liquidity, right? So we denote that as liquidity, and you can see how the market, after moving, it tapped on the trend, engineered liquidity, it pushed up, came back, tapped on the trend, engineered liquidity, pushed up, came back here, tapped on the trend, almost engineered liquidity, pushed up, came back here, tapped on the trend, engineered liquidity, pushed up, and then all of a sudden you see that the market disrespected everything and cleaned out all the liquidity, right? Moved into the liquidity. So this is how trendline liquidity is and how it works. All right, so this is also how an equal high liquidity looks like, right? So you can see that on this point here, the market has been moving downward, right? And whenever the market moves downward, it creates liquidity, right? You can see this is relatively equal high with liquidity, right? So let me just label that. You can also see here there was this move here and this move here, so this is just relatively equal high liquidity. So let me just be zooming it out for you guys, right? So you can see it here, this point here, this point here, and this point here, relatively equal high liquidity, right? Relatively equal high liquidity right there, right? And also you can see this point here and this point here, kind of relatively equal high liquidity, right? So we can draw that now. And also you can see this point here and this point here, relatively equal high liquidity, right? So you can see that here also from this zone here, tapped here, moved, tapped here, relatively equal high liquidity, right? You can see that here. And you can see that after the market created all this liquidity, what happened? The market immediately moved this way and then changed and cleaned all this liquidity. So you can see that the market moved up and cleaned all the liquidity. The market seeked all the liquidity and it took it out, right? So this is how the equal high liquidity looks like. You can see that the market engineered liquidity coming down and then swept all the liquidity going up, right? And if I invert this, this is also how it looks like on a down on this is also how equal low liquidity looks like. Engineered a lot of liquidity and then swept all the liquidity, right? So instead of trading from these points here, you can also wait to capture a move to the downside to sweep out the liquidity, right? So you can see that here something important happened. We had break of structure, we had imbalance, we had another block, and we also had liquidity, right? And then what happened? Take profit. So that's that for this model. Thanks, guys.